The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.
With so many people living longer, the fear of outliving your money becomes a reality for many of us. Will I be a financial burden? Will I outlive my money? How will I be remembered? My name is Neil Himmelstein, president of Main Street Planning Group. Please contact me by visiting mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. I will introduce you to strategies that will guarantee you will not outlive your money, that can guarantee you will not be a burden on your loved ones. Through a collaborative approach, we will uncover solutions that offer tax-efficient strategies, lifetime income, and legacy planning, choice, organization, direction, and education. That is the code we stand behind. Contact mainstreetplanninggroup.com. That's mainstreetplanninggroup.com, or call 631-647-4694. And listen to me every Friday at 3 p.m. as I host the Main Street Code for Financial Success, right here on 103.9 LI News Radio. Good afternoon. Welcome to the Main Street Code for Financial Success. I'm Neil Himmelstein, your host. I can be reached at 631-647-4694, and my website is mainstreetplanninggroup.com. When we talk about code, we talk about choice, organization, direction, and education. We work with hundreds of advisors across the United States in the areas of life insurance, disability, long-term care, and in general financial planning. And if you have any questions whatsoever, you can have your advisor feel free to reach out and reach me. You can reach me out directly. And today's show, we can just recap and talk about some of the areas we've talked about in the past. One of the things we talked about is guaranteed income for life. What a great, great thing we can do with annuities. And life insurance, how it's not just for the people who have passed, but it's for the living. It's for our beneficiaries. And also there's living benefits now, such as, disability and long-term care. We've talked about how important long-term care is and all these different needs. So today, I'm very excited to bring a special guest with me, one of the advisors that does some work with me. And his name is Tom Palmieri. Tom, introduce yourself.
Hi, I'm Tom Palmieri. I work with Forest Hills Financial Group, and I've known Neil now 30 years?
30 years.
Wow.
30 years. And Tom is a great financial advisor, one of the advisors that I like to rely on, who's got great expertise in many areas of financial planning. And I met Tom through an organization called NAIFA. NAIFA is the equivalent of the Bar Association for Financial Planners. Anybody you work with in our field should be a member of NAIFA. And Tom is the past president of New York State. And Tom, just tell them why and what NAIFA does, if you could.
Well, NAIFA is the National Association of Insurance and Financial Advisors. They were formerly known as NAILU. Basically, what we do is we lobby on behalf of consumer issues. When we go to we had a virtual Day of the Hill recently, and every time that we're lobbying, we're not lobbying for personal issue or personal gain. Last time I was down in Washington back in 2018, we were lobbying for the passage of the Secure Act, which expanded the ability for people to be able to save for their retirement, which is a key issue. In addition to that, we had a virtual conference recently, and we're trying to have the RMD age raised to age 75 as opposed to where it's at right now at 72. So everything that we do is really consumer driven. The NAIFA members live by a code of ethics, and by the grace of God, I was hired by a great company and a great manager. And when I started with MetLife, I was told I needed to join my professional association. So I can proudly say that every second that I've been in this industry since February 15th of 1985, I've been a proud NAIFA member.
Right. And, NAIFA's been around for 131 years. And, they don't advertise on TV so much, but you need to know that behind the scenes, life insurance is the only product that money can grow tax-deferred, you can take out money tax-free, and it has a tax-free death benefit. And it's only because of a group like NAIFA that you don't have to pay taxes on all that money. You don't have to pay taxes on the death benefit. You don't have to pay taxes on the growth. And believe me, the government needs money, and we've had programs where there's all these tax changes. Why is there all these tax changes? The government needs to raise money because they're in tremendous debt, and we have tremendous needs, not only on infrastructure, but COVID response. We spent so much money, so the only way the government can pay for all these things that they've just spent money on is to raise taxes. But the one thing that we're there trying to protect for the consumer is the protection of life insurance from taxation. And there has been many a battle. When the government is looking for money and looking to raise taxes, they look at every little thing to get money. And thank goodness for the efforts of people like Tom and myself and many others that are members of their association. We have fought for that for 131 years. And thank goodness, all the new tax proposals, life insurance is on the sideline. They're not attacking that, but they are attacking your retirement. They are attacking other things that we've talked about. They are attacking the taxation of selling your home possibly and paying capital gains. They are attacking retirement in the aspect that the Secure Act, although you can wait to take your money, that when you pass it to your heirs, that they now have to take it over 10 years. They can't stretch those payments out. What that does, it forces taxation out earlier from all that money you've saved. So we like to say, as you're saving, you need to look at many different instruments as you're saving that are not only diversified, but tax efficient. Hey, Tom, do you work with a lot of millennials right now?
I have a broad spectrum of clients. I work with, there's great when you get a young couple and you watch them grow and they embrace the ideas of saving and protecting their family, and to watch them grow over the years is great. I'm at this starting my 37th year. And so this past year, I've actually had to deal with a bunch of death claims. I've had 5 COVID clients that passed away from COVID. And, there's a broader range of what we might be helping people with. People look at us as a salesperson, but they don't realize we're the one that's going to come and help them fill out the claims. We're the one that's going to fight for them if they have a disability claim that perhaps is not getting answered or taken care of quickly. And the biggest thing that I do is similar to what you do, is giving people guaranteed income. More and more today, people need guaranteed cash flows to live through retirement.
And the biggest problem I see today is millennials as a group, and I'm going to do a separate show on millennials. A lot of them are investing in Bitcoin and getting very excited, and they're looking for that quick buck. But the government is now catching up to the regulatory aspect of that and starting to tax all these Bitcoin transactions. And as that's happening, you're seeing that Bitcoin, Dogecoin, a lot of this crypto stuff, which is all very, very exciting, is not really dependable, is highly erratic. And, it's great to have a sugar high when you have a quick win. But for the long term, what would you say might be a better idea for people to be investing in?
Well, I think that the idea first is not one investment that's going to solve everybody's need. Talking about Bitcoin, it's a highly speculative situation. And for us, for me as an advisor, as well as for you, when we meet with clients, unless they have their base taken care of, do they have enough emergency money? Do they have money saved in traditional savings account, their 401k, retirement plans, their life insurance? Have they taken care of the risk management issues? Do they have life insurance? They have a big if you have a mortgage on Long Island, you're going to have a big mortgage. And so do you have disability to protect that? So we look more to make sure that people are broadly based covered before we get into speculative issues. I think that's the way I would address that one.
Right. And credit cards. I mean, I see credit card debt. It's a never-ending. Once you get into credit card debt, what a losing proposition.
Well, the reality is that people don't realize. They say, "Oh, I see something on sale. Oh, it's 20%. It's 10% off." Well, that's great. If you got a 20% interest rate, you really didn't save any money. And I think that more people need to look at it as to what do you really need, a needs versus a wants thing. Hey, I need to eat. I want a new car. And the more that you basically have a plan in place that will allow you to make sure that you have income coming in to take care of your bills, then you can basically do what you want with your money. The reality is that we think that you need to have a solid base before you do anything speculative or, in this case, damaging, because it takes forever for people to pay off their credit cards debt.
Great.
It really does.
Thank you so much. You're listening to the Main Street Code for Financial Success. We're heading into a commercial. I can be reached at 631-647-4694. That's Main Street Planning Group. Tom, how can they reach you?
My work number, my cell phone number, 917-442-8026, and the work number is 631-589-2991.
And we'll be right back with you in a few minutes. Thank you so much. Welcome back on a beautiful afternoon here on Long Island. Looking forward to a great Memorial Day weekend. Can you believe we're halfway through the year? Isn't that amazing?
It goes quick.
Yeah, I'm here with my guest, Tom Palmieri. This is Neil Himmelstein from Main Street Planning Group. You're listening to the Code for Financial Success. Choice, organization, direction, and education is what we go by. Tom is one of the many advisors that I love to do business with. And you know why I like doing business with Tom? He believes in the client first. It's not about product. It's about doing the right thing for people. Tom is not only does the right thing for people on a financial planning side, but he's such a charitable person. The kind of person that Tom and I are like, we met each other 30 years ago and we realized the similarities. It's just amazing, because doing the right thing is what it's all about. One of the right things to do in this business, and so often, relationships today are so much different than when I was growing up, because the families get fractured. The kids go away to college. I know my kids, we started in New York. It was very expensive for them to come back to New York and find a job. My son's now living in Denver. My daughter's living in Hawaii. My son went to graduate school there, and all of a sudden, the families are in different parts of the country, in different parts of the world many times. And what happens is, when it comes to planning, you really should do intergenerational planning. You really should help your parents, should sit down and understand, and your children. If you're working with, 30-year-old millennials, we should be talking to your parents about making sure they're properly placed, and also the distribution of their assets, and to make sure that they have proper long-term care plans, whether it's insurance or plans, and the children, whether they're on the right path towards retirement. Just because you went to a great school and got a great job does not mean you're prepared to move forward. Believe me, people today go through 5 to 7 jobs before they're 30, before going on a career. Back when I was a youngster, you had one career, you stuck with it, you were with one company, and you retired. That is not the world anymore. And the world is changing, careers are changing. So I want to talk about intergenerational planning because, Tom, you said something very interesting earlier. I've been to a few funerals. The older we are, the more funerals we go to. It's a horrible subject to talk about, but doesn't it feel kind of good to be the only guy at the funeral with a check in your hand?
I'll give you an example. I had a very good friend pass away recently, and as a result of planning that we did 15 years ago, they couldn't find their family trust, and I happened to have a copy of it signed. So sadly, when the gentleman passed, and he was a great man and a great family man and someone that I truly honored and respected, I was able to help the family out by just letting the family know that, hey, the planning's been done. And I know these are issues that we deal with, very emotional issues. We deal with family and finance. It doesn't get any more emotional than that. And, we've all heard the expression that blood is thicker than water. Well, guess what? Money's thicker than blood. And when we run into these situations where we're dealing with family members, the families that have had open conversations with their children, their grandchildren, or perhaps a charity that they like, things flow a lot smoother than when you have somebody who might have been the strong silent type who kept their family in the dark about all the finances, and now they're scrambling at the last second of, hey, do we even have enough insurance to take care of the funeral? Those are not questions you want to ask at that time. You want to make sure that you have this planning done long in advance, and kind of like Ronco, set it and forget it. And if you have it and you have your program set up right, the way that Neil would set it up, the reality is that your family is going to be in such a better position to make sure that they're able to pass on the assets to whom they want. And unless Uncle Sam is your favorite relative, let's pass it on to your loved ones. Let's pass it on to your surviving spouse. Let's pass it on to your surviving children. Let's pass it on to a charity that you might have a certain feeling for. So
and that's a great point. And I think one of the things is when I talk about choice, the second word I always talk about is organization. And I think the most important thing is to have your assets in an organized fashion and to review them quite often. And what I mean is, you know, in the state of New York, I don't know about other states, there's no filing of a will. You could have a will done, okay, and then 2 years later do another will. But if your family doesn't know about it, or it's not locked up in some secure place in New York State that says, oh, this is the will. All of a sudden, somebody dies suddenly, and you're scrambling. Where's the will? What's the directives? So if they can't find the will, then you have a big mess on your hands, okay? All of your assets are titled differently. And I've talked about this in previous programs. For instance, life insurance goes by beneficiary, not by will. What does that mean? My wife and I got married and we had a child. My wife was the beneficiary, and then when my child was born, I put on the contingent beneficiary. Now, my second child was born, but I never put them on as a beneficiary. My wife, let's say, had passed, and I pass, and my life insurance goes to that one child. Or what if I got divorced and remarried and never changed the beneficiaries? Whoever the beneficiary was on that contract, if there was no changes, goes to that beneficiary. And I've talked about situations where that's happened, and it happens every single day. Now, real estate is another situation. Actually, there's something that happened in the news just yesterday with real estate where someone, you know, I don't want to get into a political discussion, but someone's apartment who they thought was a gift now is being evicted because she talked on the news. And I'm sorry, but you know what? Titling of things is very important. And at death is the worst time, because if you're not organized, if you don't have a plan in place, and you don't check your beneficiaries, and you don't do the right things, and you think you know it all, that's when you're in real trouble.
Yeah, you basically unintentionally disinherit somebody. That example that you talked about, you had your first kid, you named him as contingent beneficiary, your wife passed, now one child gets all the money, and everybody would like to say, oh, but my Johnny or my whatever is going to do the right thing. Once they get the check, I rarely see the right thing done, seriously. So if you are been remarried, it's a great idea to get your beneficiary, to update your beneficiaries. It's a great idea if you've had more than one child and you took the policy out 10 years ago. Let's make sure that we don't unintentionally disinherit somebody, because that can scar somebody as well. Absolutely.
And it's another situation too. And, I know there's been attorneys on some of these other programs that talk about special needs. If you have a child that's special needs, whether they can't emotionally or can't handle finances, or they need special needs from the government because they're relying on government help, and you leave them a large sum of money through a life insurance policy, well, all of a sudden, all those benefits they get from the government, they can't get anymore because they have this money. Secondly, if a special needs trust or things aren't properly set up, and that person is irresponsible, that money is gone. So you really need to do not only financial planning, but legal planning as well. And one of the things we pride ourselves is putting a team together or having your team reach out to us so we can help coordinate all the different things you have in your life. You know, one of the things that I've noticed as well is throughout your lifetime, you may have the best successful people. You may have the best realtor and the best mortgage guy and the best life insurance guy and the best investment guy. You may have all these separate parts. But at death, if you're not organized, all of a sudden you go into this world called probate. Okay? Things aren't directed the right way. That's when the lawyers and accountants really make their money.
Well, even a simple issue of guardianship. Forget about the financial assets. Who do you want to raise your children with the same values that you have? And if you do not have these things taken care of in advance, and it's too late when you're gone. If you don't have it done in advance, you could have somebody raising your children that you don't necessarily want.
Great. Thank you so much. This is Neil Himmelstein from Main Street Planning Group. I can be reached at 631-647-4694. Our guest, Tom Palmieri.
Thank you.
Just give one phone number, please.
Sure. 631-589-2991.
Have a great Memorial Day weekend. You've been listening to The Code for Financial Success. Thank you. Neil Himmelstein signing off. Have a great Memorial Day weekend.
The views and opinions expressed on this program are not necessarily those of this station, JVC Broadcasting Management, or its sponsors.